I want to talk about Wile E. Coyote for a moment. Wile E. Coyote runs off the cliff and looks at the screen and then drops. But there's a moment where he looks at the screen before he drops. Is that moment where he looks at the screen long enough to get the equity market from one side to the other? Can we look through the gap?
Yeah, that's a great question. I think, luckily we're all sort of anticipating this. And frankly, we've been anticipating this for quite some time. We've all been looking for this next shoe to drop. And I think the reality is we've had time on our side to position the portfolios. I mean, most people have been talking about a recession, honestly, for the last year. So most people have taken steps in their portfolios to de-risk those. And I think the reason why the markets has not really meaningfully traded lower, for example, on the banking crisis last month, is because most people have raised cash. Most people are feeling pretty comfortable getting paid close to 5% in their money market accounts. And we're now also starting to inch back into the bond market as well. So investors have had time on their side to prepare. And if we have that next shoe that drops, if we have the sharp decline in the equity markets, most people are going to find themselves in the position of having cash they need to deploy. So one of the risks that I actually heard from some of our investors is, are we going to get that flush out where we really want to deploy the cash? That's what people are starting to worry about.
Well, is that why we tend to see still a buy the dip scenario for that exact reason?
Yes, I think in some cases, I heard this expression the other day that we went from, being just fine to miss out any sort of, the upside because there wasn't any, to now back to the FOMO.
Right.
The fear of missing out is back. And I think that's true for some of the tactical investors. I think it's one of the reasons why if we continue to move a little bit higher from current levels, you'll have systematic traders get back into the market. You'll have hedge funds step back in. You might even have mutual funds. But some of the long-term money, let's say family office money, sovereign wealth funds money is looking for a better deal still. They're truly looking for another, 10, 20, 30% declines across asset classes, and that's what we don't seem to be getting.